Good evening and welcome to the India market review for 19th February, Friday. The market has closed today and we're looking at the week gone by, and also we're going to depart from our normal format and do a fundamental review of the Indian indices. Before that, quick review of things that I think we discussed last time. Uh, yeah, so really nothing much has changed, at least as far as um, I think the news or politics, or I'm not aware of any particularly good news that or any big event rather that might have happened this week, though I must admit that I'm reading a lot less of newspapers and getting off of media quite a lot of late. Um, Actually, just want far less noise in my head, and feel and sort of feeling quite happy with that, and also feel that I'm making better decisions on many things, including the markets, with less noise and less, corrupted thoughts. But just before we jump in, just to very quickly review some of the things that we discussed last time, and then we can move on. Something with my database. Okay. All right. So what I want to do is just look at these stocks before going on. I'll just push this off to another screen. All right, great. And look at what happened. So some of the stocks we had said, uh, could be. Uh, is this the one? Yeah. Okay. So we had mentioned about Bajaj Electricals, and we had uh, actually said that this could be a multi. It's close to multi-year levels, and we said whether this would be something worth looking at in terms of a buying opportunity, and we had put, of course, a lot of question marks. So what you see is Bajaj Electricals, and what you can see is it's certainly not bottomed out. So this was 1, 2, 3, 4. This was last week, right? And what's basically happened is, so we got a sort of hammer, we got a tentative confirmation, and we had this big volume. This was the on the basis of which sort of view was made. And also, if you look at the indicators on this page, you will see that there is definitely positive or bullish divergence, which is most certainly in play, right? And though it's not there on the weekly charts yet, and therefore maybe we still have not seen the bottom of it, and it's actually not yet hit bottom. But if it does, which is at 153, and we are right now at 167, there could still be an opportunity. So I just want to do a quick review. So not yet there, but possibly coming there. Oh yes, this is very interesting. Let me see. Okay. All right. So what I just noticed, by the by, is something which is massive on the daily, but it actually doesn't show up on the weeklies. To that extent, really not valid. Not really. This is the line to watch out for, and you will notice that this line is there also in the MACD. Okay, and I'm sure all of you know what I'm looking at now, and that's a massive bullish divergence. Having said that, it has certainly not bottomed out yet, though it's very close to the bottom, right? So the question of should you continue to look at this is, I think, very much on the cards, and this could actually, uh, you know, be a buying opportunity still. Okay, so that's a multi-year bottom query buy, right? And could go back to 200, 206. Then look at Symphony. Okay, so these were all stocks from the consumer durable space, and if you remember last week, consumer durable space was a strong space. So this one has come to definitely a good support, 200, and it has done that on clearly falling volumes. And there was this massive spike here today. Not much of a move up, but from here, you never know. It's definitely still should carefully watch for it. Candidate and a good place to actually take a trade with a very low risk, 2000, about 20 rupees or 30 rupees lower. What's the low of this? Let's see, 1972. Yeah, about 40 rupees lower than the current price. That should be a stop loss. And if it goes up, then 2140, of course there are multiple moving averages sitting right there to stop its rapid up move. Okay, so that was continues to be on a buy. It's actually a low risk buy now. TTK, TTK Prestige. All right, so that has also gone sideways. 4,200, still bidding its time. And then we had Blue Star. Oops. Was it Blue Star? Blue Star Co. Okay, I'm going to skip this. Then we had looked at metals, and we looked at Tata Steel, Jindal Steel. We said all are good opportunities to buy, and here is Jindal Steel for you, right? And if you look at Jindal Steel, then you will see that after last week, this was the 1, 2, 3, 2, 3. Yeah, it did go up very nicely on Monday. Extremely good confirmatory reversal with evening star, morning star rather. We've got then some sideways consolidation. Moving averages are still trending down, and that's the one of the technical reasons why it's still not broken out. But once it clears this zone of what is this, 66, 67, you should probably expect a big rapid up move. So Jindal still remains a buy with a trader stop loss below, I would say, 53.30, and for an investment could be something good for the long term. Then we have Tata Steel, and well, voila, so that's gone up really nicely. Went up on Monday itself from 220 to 240 or thereabouts. Just give it 30 seconds. The Azan is going to start here. Hold on. All right. Okay. So Tata Steel is clearly something which has gone up. The volumes haven't really picked up though. There was this hint of big move here with this. And one thing I want to just point out with just on this screen is that we've got this chart now from October to date. And October we had a bottom here. Let me just bring that in, right? So like we had a double bottom in August and September of last year, and the stock has not made a lower bottom. Actually, it has clearly attempted to make higher tops, higher bottoms, has come back, corrected again, and now we are probably starting to see the beginning of another up move, right? And one by one you are seeing quite clearly that some of the downtrend lines have been broken, and this typically how things tend to work out. And this could possibly be something which is strongly in the accumulation zone, right? We can always only be sure in retrospect, of course. But what I wanted to sort of emphasize here was to show you the relative performance of this over the Nifty. And yeah, so I'll hopefully let it settle down at your end. All right, great, should be better. Um, and what you should be able to see is right on the left edge of the screen is a red candle bottom there, right? And in the middle pane, if I can just invite your attention here, the red dot, okay, that's the relative strength. And you've got the blue line, I hope that is visible, and that is of the Tata Steel. And you've got the sort of brownish line below, which is of the Nifty. And from this time of when was this, what was this date, 29th of September last year. If you had to invest in the Nifty, you would be 8% down, but if you had invested in Tata Steel, you'll be 25% up. All right. Let me just get that right. 200, 250. Yes, correct. That figure is right. Right. You'd be up 25%, and clearly the Tata Steel stock is now outperforming the index. So this is just one more way of checking on things. I just wanted to sort of use this opportunity to highlight this. And then let's look at the other stock in this sector which we had recommended last time. It was JSW Steel. And if you look at JSW Steel, that stock is actually now outperforming fantastically, 28%. Actually, Tata Steel, JSW Steel, if you had bought, would have done equally uh, well over the 6-7 months. But obviously, this one is actually looking healthier than the other stocks. And this one is above the moving averages, etc. And this is something we have been talking about, or I've been talking about in the IMR for at least, I think, a few weeks, if not a few months, saying that this is definitely showing strength. And well, this is now actually quite handsomely rewarding anyone who took on trading into this or investing into this, except that the volumes are actually a bit of a concern, and that is something we need to just watch out for. But I think this will definitely pick up. So I just wanted to do this quick review. And so basically the ones from the um, consumer durable space are probably still not ready to bounce, but they have definitely um, come to very good supports, especially Bajaj Electricals and TTK. And in the buy side, we said last time quite strongly, JSW and Tata Steel have performed well. Jindal is still probably yet to make its move, right? Okay. So I just thought, it's good to review our discussions from last time to know whether we are like doing progress or we are just having a chat shop here. So glad to know that it's more than a chat shop. All right, cool. So like I said, probably really nothing significant. If there was anything, there is okay, let me, of course, there was the so-called freeze in oil output. Okay, initially the news was a cut in oil output, but it was not, right? And Iran has welcomed it, right? So this was with Saudi, Russia, and 2-3 other countries. I'm forgetting the names, right? So this is good. I mean, if they're coming together, then closing ranks. So budget is in 2 weeks. LTCG, a lot of rumors, right? RBI policy, right? But there is now RBI policy was done. Sorry about that, right? Uh, this was 2 weeks back. The expectation on um, what was that? There was some news. Yes. I just wanted to mention about, we are all, I'm sure, read about how Bank of Baroda shot up after that massive, NPA cleanup, and it, well, what a fantastic move. Corrected again last week and then has moved up again, and that's it, right? So more or less, very much on track, I would say. And with that, let's quickly jump into what the rest of the, you know world is probably doing right now. And if we look at the Dow Jones, uh, you will see that weekly chart formed a nice Marubozu type weekly candle. And let's look at very quickly what's happening in the rest of the world as we speak. So as we speak, uh, the US is down, but not really much, a little bit on the S&P, right? And then on the Dow Jones, we are down about 0.8 to 1%. Given the sort of rally we've had in the last, 1 week, I would say that this is okay. Really wonder if there's any particular news that has come out. I don't really. I'm not aware of anything, at least. On Europe, okay, about 1% down across the board. I would say a decent closing for the week, all said and done. Right. Okay, so that is this week's, and that's really not going to change this weekly candle for the Dow Jones at all. It's still going to be, very much positive. So that's good. We have talked about a triple bottom. As long as next week the Dow Jones can go above 16,600, we're probably well on the way to further up moves there. So far, that's fine. S&P was the same picture. And as we can see, oops, this, I need to zoom it out. Oh God. All right. Something wrong with the S&P data. All right, doesn't matter. Let's look at DAX, and with DAX also showing that, up move. Like I said, the things in Europe, the indices in Europe rather, were still not coming close to supports, and you can see that here actually. If I take that and push it down, it's still in a downtrend, and it probably hit that upper move of that downtrend and then has moved down today. And that's for Germany. So US is bottomed for now and is moving up, but Germany is still, for all practical purposes, on a downtrend. FTSE, right, okay, is still on a downtrend. So we'll still get a evening star, but then we've had a false one. Just, by the way, I'm showing you weekly charts and not daily charts here, so it's a long-term picture. Uh, we've had a sort of false move here, false evening star, morning star, sorry, another false morning star could be happening. So the moving up from this level is definitely, from about 6,100, is definitely important. Having said that, yeah, all right, so there is definitely, where is that? Yeah, on the bottom is a, that is a trend line, sorry, that is the RSI line, okay, and not really a good strong bullish divergence, but it is there, right? And that too on a weekly chart, and this bullish divergence has been lasting for about 2.5 months now, as far as um, FTSE is concerned. With that, I would like to see if there's anything on the DAX. Now this is surprising. I've gone back to DAX and I can't see any divergence on the DAX. Right now is RSI. I'm not sure whether you can see it. I hope you can, but it's not there. So that's interesting. And then if you look at CAC, France. And CAC France definitely has a divergence, a bullish divergence. Let me put it up, which is right there, right? So surprising that Germany is not showing it, the bullish divergence, but France and your UK are showing that. Going to Nikkei, just for the sake of completion, right? So we have some data problem with it for sure. Okay, all right. So Nikkei at best forming a harami pattern in candlesticks, nothing more, and this down move has actually accelerated as far as the Nikkei is concerned. So as long as the Nikkei doesn't break 15,000, we are okay, but that's way too early to say. We'll just have to wait and watch. The Japanese economy was officially back into recession last week, I think, right? So what else they will do, we really don't know. All right, so that's the global wrap up, and the US definitely, still showing strength. I would say CAC and FTSE showing a bullish divergence, and DAX not yet there, and we'll just have to wait and watch. So I would say 50-50 uh, on the bullish bearish side, sort of stuck in the middle with the bias that is probably a little bit on the long side, at least in the short term. When I say short term, I'm talking about the next 1 to 2 weeks at best, right, at this point. So coming to the Indian market, let's look at where India is. So we look at NSE, okay, and if you look at NSE, this is what we have done. And so what's oops, what is this? Oh, weekly, yes. Okay, so this is the weekly chart of the NSE. Last week, not this week, the week before rather, really big red Marubozu type candle. This week's data, after all said and done, okay, we've got a green candle, but nothing convincing. As a matter of fact, this downtrend has now accelerated, right? As far as the Nifty is concerned on a weekly basis. So the question comes back, are we looking at acceleration of the downtrend rather than uh, uh, what a finding of support? Now that's on the weekly chart. Let's look at the daily chart. And if you look at the daily chart, it's gone up, but clearly you can see one thing, it has gone up with poor volume. So this is definitely a point of concern in my opinion, right? Can't ignore that. Volume has clearly come down. It's come to a very important support, or rather resistance, of 7,200, and looks like it's very critical what is going to happen here. So we've got multiple resistances just sitting on top. You got 7,200, 7,300, 7,400, and the volume is clearly coming down. So not a good sign at all of uh, the move up. And I think next week is really going to be, or the next few weeks are going to be very important as to how things pan out. So technically this is not a very happy picture. So should we be getting out of our long positions at this point? Could the market go down? Technically it looks like um, things are definitely shaky. There are various windows that haven't been closed yet, right, on the way down. There's one there at 7,600, 7,700 in the January, and there is one right there in mid-Feb, right, or just 2 weeks back, or the first week of Feb rather, on the daily chart. So there could be, if some good news comes out, just a swift move up again, but right now that's looking unlikely. The only triggers are basically the budget. So all that make in India, all that noise really hasn't gone anywhere so far. Okay. So one of the things we wanted to do today, or this session is to look at the fundamental side of the market and see if we are finding any opportunities. So let me bring this up. Okay, so this is the Nifty PE first. Let me bring that up. I should have put the where is that? Yeah, there we go. All right, so this is the Nifty PE, and well, I guess those of you who have been to BIC's FA class will recognize this chart instantly. And let me just make this weekly. All right, so one thing that should stand out for all of us is that it has really come to a support level, as you can see, or a resistance level, depending on what you want to say, about 18 and a half, 19, 18.75 tends to be a lot of uh, a place where quite a bit of um, support is there. And if we come to about 17, 17.5, which we have come to in 2012, 2013, there is possibility of the market showing some decent value at those levels. Just to add, there was I don't remember who, but one of the rating agencies, S&P or ICRA, whatever, reaffirmed GDP growth in India for the next 2 years at 7.5%. Okay, so this is definitely a good, what to say, macro news, but technicals are technicals. Now, if you look at this, and you know what, at this point, a lot of people are talking about um, this being a repeat of 2008 and things like that. There's some rumors going out about Deutsche Bank not being able to do various things, but Deutsche Bank, on the other hand, is talking about a bond buyback, and they're trying desperately hard to reassure everybody that everything is fine. And at least from whatever little I have read, there doesn't seem to be anything particularly big going on, but you never know. It could just be in the closet and bang, tomorrow we just slide. So technically things are getting worse, as we already saw. Fundamentally, however, given that there are no big fundamental um, disasters or bombs going out from the current level of 19.5, let me just zoom in. Okay, so this is where we are at 19.5 today. 17.5 is about 10-20% down, right? So let's just round off to 20, two and a half, sorry, 10% down, right? So 10% down on the Nifty from here, which basically means we are talking about 7,200, 10%, 700 points, which will break it to about 6,500, right? Around 6,500, maybe I even say around, give or take, 100, 200 points around that. And just to reiterate some of the things that I've been saying, uh, which is of the one thing I am particularly and personally very interested in is this triple top multi-year. I know some of you are getting fed up of hearing me this, but this is where the opportunity could really be. So technically 10%, or rather fundamentally 10% down, and 10% down is around the place where if you take out 700 points, we're talking about 6.5, 6.3, some technical one-day panic moves like you saw last week. We had a 250 point intraday fall on the Nifty, and then it also recovered the next day. And then the week before that, there was a 150 point intraday fall, and we recovered that entire fall, completely intraday. So around, I think technically sorry, fundamentally 10% lower is where some good value definitely is on a valuation basis. And well, quite frankly, I think that's a point to really start looking at buying. These sort of moves below 17 and a half, 17 PE on the Nifty, if and when they do happen, like for example here, right? Where is my, right? So I want to put, just one guide there, one move there, and these sort of moves, basically three major ones, and well, there's one more, four here. Here we go, right? Some major global or some major Indian disaster, right? Mostly it tends to be a global scenario that tends to freak the market out. So given history, I would say we should be focusing on any global blow up, if any, which could just make the market slide. Remember that there are the central banks are really quite happy to print money now, and people have been talking about that being the new normal, right? So in four of these past events or time frame, 2001, 2002, 2004, so they all happen in back to back alternate years, and then 2008, except for one, which is this year when unfortunately Vajpayee lost, and the NDA came crashing down. All the other three events were global phenomena. I'm not aware of anything particularly disastrous going on in India right now, but it's always in retrospect. I think the only thing that could really spook the markets locally in the next few days, weeks, is a very bad budget, right? If the budget is perceived as being unfriendly, like there's the Vodafone tax case, which is just refusing to go away. The IT department sent a notice, and also everybody's talking about what's going on with this. The government was expected to sort of let it go, but they have a new notice. So what's happening to retrospective tax, right? So when you look at all that, if and then long-term capital, whatever, uh, if the market is unhappy, basically with the budget, I think that's something that could really spook the market, and we just get, you know, 10, 5, 10% down easily. I think if the budget is on the 29th, we should probably have a live wealth lab session on that day, I guess. All right, so let's maybe schedule for that. You can let me know later if you're interested, and if you watch this recording, do let me know. And if and when that happens, I would think that's a good opportunity to buy. Metals, as you already saw, have seem to be bottoming out, and then there could be any number of other sectors which are in the similar space. Okay, so let me finish this Nifty valuations, then we can proceed to other things. Nifty price to book value. Okay, so if I look at that, then you can see that that's also at a pretty good level. Please remember that they don't really have to work in tandem, right? If these valuations can definitely vary. Now, this is definitely interesting. Okay, I'm really glad we're doing this session today. Uh, so now the thing about price to book value, first of all, okay, so we just read it the same way as um, the PE ratio. Okay, and why I'm saying I'm glad to see this is, if you remember the PE ratio, we were sort of, or let me finish this, price to book value ratio, we are really at the lows of, this is where we are, and we are really at the lows of the normal threshold of where the market tends to bounce off, right? And again, unless there was a major global phenomena, we have really not gone below this. uh, this is definitely a good one, right? In my opinion, that the market has sat here at 2.8 price to book value, and is perhaps from this perspective, if you really look at it, we are looking to 2.8. If you're talking about 10%, you're talking about another just zero point 0.2, right? So 2.6 will take it to there, right? Okay, all right. Even we say 2.5, that brings us to really some very, very important lows historically ever seen. It will not bring us to the price to earning ratio lows, but it will bring us to price to book value lows that were seen in 2008, right? So this is I think definitely I'm just, my mind is zooming with ideas right now about what might be happening in the market. There is definitely value. I didn't really expect to find this. These are not charts I actually see every day, but I think this is fantastic timing. We are all really lucky to be seeing this. I want to open the other one simultaneously so that we can compare. Okay, where did it go? I've got so many here, a little confused. Just give me a second. Okay, so we were looking at the Nifty price to book value, and I was saying that this is really at a very, very important support level. I will probably not sleep tonight. Okay, uh, so if we come down another 10%, let's say the budget is the trigger, then you've got it around thereabouts, right? We are 2.89. Just let's make it 3.3 down. It's 2.3 minus zero point 0.3 to 2.7, 2.6. I really don't care. This is fantastic valuations. Let me just look at dividend yield. Okay, and this is the dividend yield all the way. All right, so this is definitely not that attractive, right? In terms of, this is where we are. Okay, and it's not particularly what would I say, very attractive. If we drop 10%, then this is about 1.6. Let me take out 0.1, 1.6, 0.7, 1.75. Yeah, we'll probably just go to there if the market drops by 2%. And well, again, it doesn't look that impressive. Please remember, dividend yield has to be understood inverse, flip side. Now the thing about both dividend yield and PE ratio is that it's earnings based, and as we know, the earnings has actually been coming down, right? So if I just open another chart on Nifty EPS, right? Okay, so this is the Nifty EPS, and the Nifty EPS, unfortunately, right, has actually not been trending up for what about let's just make it weekly. Yes, has not been trending up clearly for the whole of 2015. 2016 we saw a jump, but now we are seeing a decrease right now. So there is real concern about growth, right? And I think this really illustrates what the market is sort of, I would say, hesitant about, which is growth has really stalled. The earnings growth, at least, right? Growth is there, but it is not in the rate at which it's expected. And at least in 2015, we have seen earnings come down. We have seen them go up again in the second half of 2015, but this quarter has again not been good. Now, with the massive cleanup of the banks side and various things, things could recover, right? There's absolutely no doubt about that. Things could recover, and uh, earnings could improve. I don't know. There is, of course, just to add more meat to this discussion, that announcement which was already discussed 2 weeks back about uh, the government clamping down on imported steel duty. The capital good companies cried foul, but the steel companies you see are reacting well, and we don't know. So I think the budget is really going to be, this time's budget is perhaps going to be critical, more critical than before, because of global slowing down, uh, and okay, we didn't talk about crude oil. Just to bring that in, crude oil might have bottomed out at around 27-30 dollars, and if the OPEC and all, so that sentiment about low crude could change, and globally things could, at least for the short term, perk up. But I think the truly focus, I haven't felt this way about the budget for, I think, the last 2-3 years, at least, that I can remember. We definitely need some sort of a big bang opening up of the economy. By the way, I don't know if you have seen Make in India ads on CNN Global. Okay, Make in India ads on CNN Global, really interesting. I wouldn't say great, but I would say they're good enough to catch somebody's attention. I've never seen that sort of an ad campaign about India so positive, at any time that I've watched an international TV channel in the last, I don't know, a decade at least, right? BBC, CNN, all that stuff. In that, by the way, if you look at the Make in India ad, the only company whose symbol or the company's name has been shown, at least in the one ad, a few ads that I saw, is Tata Consultancy Services, right? So I'm just wondering whether, just putting out a what conspiracy theory out there about whether Tata Group will, benefit because more people are just going. It's a short-term thing or whatever. But just putting it all together, I think this is what the market is really worried about: earnings growth not happening, and what do we do going forward? If these concerns are sort of, what would I say, mm, assuaged by Jaitley in 10 days from now, then the market's really going to be very happy, and we will probably see an up move. And that's it. There's really nothing much to say. So this is basically about all the nifty, let me put it all up. Yeah. All the nifty valuations data, and that's there for any of you who are watching this all on one screen. Yeah, we've got some small software glitch. So on the top left here, just so that we are clear, is the nifty dividend yield. Okay, in case there's any problem reading the icons. This is nifty EPS. Okay, just EPS. This is something probably some of you are seeing it for the first time. This is work that we've been doing. Vidya has been helping me with this, which is, this is not PE ratio, this is not dividend yield, this is not, just EPS. Is it growing, not growing? And you can see that in 2003 the nifty EPS was what, about 75, and we are now at 350. So the long-term growth is definitely there. By the way, just to, revise this, so we had this fall in, okay, let me maximize this. In 2008 2009 we had a, like a 1 year downtrend, and well, for what it's worth, if we want to get a little romantic about this, and maybe even, patriotic, given the flavor of the season, well, we've got a sort of 1 year pause in that growth. Okay, and whether we're going to again reclaim growth and start to grow, that's really the moot point. And if you are a, multi-year investor, uh, basically you can rule out the annual results. This quarter is not really going to be good at all. What we will really need to focus on is 2, 3, 4 quarters from now. And even if I think there is, not a strong sign, but even a, 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 a trending weak trend, let it be, sign that the market earnings have improved, I think the markets will really shoot off, right? So that's the fundamental view that there is. Okay, so that's it. I mean, if there are any questions on this valuation thing, please feel free. Let me just label this and finish it off in case anybody is watching the uh, recording later. So bottom left of the Nifty PB, and on the right is the Nifty PE ratio, right? Okay, so we've covered all these long-term ratios for the Nifty, and then really there's a whole question of being able to do this for all the indices. We do have quite a bit of data for the indices, Bank Nifty, IT, this, that, and all, but I think I'll save that for yeah, maybe later in the session, or if not, then in a subsequent IMR. I think the Nifty basically lays the ground, and we are working on getting more data for the other sector indices. We don't have it yet right now. That's why I just said, let's get started now, and then we will just build on this, right? Okay. Uh, so I mean, it's a good start. I'm actually quite happy to just say, let's close the session. It's good. Go home, start collecting your cash, and sit on it. The opportunity could be just days or weeks away, probably not months away. I am really surprised that it is come this soon, fundamentally speaking. However, let's also do our indices and do a full review of the technical indices and see how that is going. Uh, so just one sec. Okay, so what I want to do is basically all the index, sorry, sector indices, and let me start with our usual. We'll just go in that order. We'll do the Bank Nifty first. Okay, and what we have on the Bank Nifty is so we're looking at weekly, by the way, folks. All right, just to be clear. So the Bank Nifty more or less is doing the exact replica of the Nifty. Okay, as you can see, you have a downtrend which is accelerating. You have the market at the so this level. We'll keep this level for the future, right? Because when the market does rebound, it's going to be a resistance. And the other thing I wanted to point out is that things have accelerated down, right? Okay. Now we have formed a Harami formation on the Nifty, on the Bank Nifty. And when I go to the daily chart, the Bank Nifty is clearly way below the 200-day or 100 long-term moving averages. So this is uh, all right. Okay. Now, okay, so there's a lot of pictures now. Let me just. Okay, I'm just trying to test out something yeah, which people have been talking about in some fora, which is the ultra long-term line, which is there. And right. Okay, okay, okay. So this is not all right. So that's a massive, channel that some people are talking about in the media. So I'm just putting it there for our reference. Okay, that's another level. Okay, so I hope you can make sense of it all, because it's probably very cluttered. So I'm trying to see if I have a clean sheet on that. Okay, fine. Let me do it here. Oops, wait, weekly. And if we just extrapolate that, that is there. All right, you can see how that line really nicely fits. Of course, one of the criticisms of technical analysis is everything fits. So if any of you have heard of pitchfork, right, this really looks like a nice pitchfork um, channel. I won't get into that here, but go look at it, and basically three levels. So you've got this middle level sort of, it's very wide channel obviously, or good, what, 10,000 to 18,000. It's an 80% channel almost from the lows to the highs, 60-70% moves. But the point here being that this is coming to its multi-year uptrend support. So we are definitely not there yet. That support is at around 12, at around 13,000 at this point. Depending on your line, it'll be, could be a little lower, could be a little higher. Let's put any long term, right? So there a very long term support, but that would break the trend line. I'm looking for something higher. Okay, so this is not bad at all, right? I'm just going to remove this. So you've got 20, where is this? 2010, 2012, 2013, and then we could be coming back to those levels in 2016, right? So you've got a multi-year support at around 13,000. You've got an uptrend line which is all the way from the 2009 lows, and you definitely have a well over what, 30% correction in the stock prices of the 30-35% correction on the bank. So I'm just wondering whether, banks are another place where value has appeared, and well, let's do that and see if we have value on the bank Nifty index, because as we all know, banks are quite heavyweight in the Nifty space. So if the banks are not doing well, of course, one of the reasons why the Nifty has gone down is because the banks are not doing well, right? So let's look at where the bank Nifty is. All right, so we've got bank Nifty PE ratio. Let me just, okay. All right, so we've got the bank Nifty PE ratio, and we are there, and we have actually bounced from there, right? Okay. Uh, so looks very much similar in my opinion to what we discussed for the Nifty. If you remember, we said just a few 10% lower is, where it tends to just what do you say, uh, bottom out, and we are at 15.9. Okay, so basically 16, 10% lower would make it go to about, let's say, 16 minus 1.5, 14, 14 and a half. So we'll be there, not much lower than where we are actually, right? Or this line. So we are definitely in the support zone, uh, fundamentally speaking, if I can use that technical concept here, except that in 2003-4 we were really way low, and then basically the banks got re-rated. Having said that, if something really disastrous happens in terms of NPAs, in terms of RBI policy, but Raghuram Rajan is on track to say that by 2017 he would have made sure that he's cleaned up, or rather RBI has cleaned up all the NPAs on their system. So we're talking about 4 or 5 quarters from now. So I think the pain, if any, is in the short term, as in like in the next 3 to 6 months. There could be a reduction in interest rates in India. Next RBI policy, there's a lot of criticism that is now high. But let's see, we will just take it. I think our RBI bankers have been extremely um, competent in whatever little I know, and if it was not for them uh, and their monetary policy over the last several crises, we would be in a far worse situation. Okay? Uh, just wanted to point out that as I'm looking at the European markets on another screen right now, the DAX is 1.5% down, right? So it was around 1.1, now it's 1.5% down. So all the European markets have slipped, but anyhow, that's okay. This is a lot of I think uncertainty in the market right now, unless there's some what do I say, event that has happened which we're not aware of. By the way, Europe seems to be intraday having, sorry, US seems to be on an intraday basis seems to have settled down, right? Okay, yeah, let me come back. Sorry for keeping jumping here and there. Just got my attention. So the Nifty PE at a reasonable support level, but not at a compelling buy. 10% below the Nifty would be compelling buy. 10% below the bank P would be okay, but nothing compelling on it. Okay. To finish the other ones, Nifty price to book, or let's do dividend yield, because that's also profit based. So if you look at dividend yield for the Nifty, then sorry, Bank Nifty, wow, we came close to the bottom in 2015. So that means we were, pretty expensive. Okay, and then okay, so I think lesson to take home in 2014, our banks were really expensive, right? 1.9 in terms of, or rather, sorry, cheap in terms of the dividend yield. And then in 2015, that was at the peak, right? What do we mean by peak? We mean this, right? This is the peak we are talking about, when the Bank Nifty hit 20,000, 500 at that time, right? So this is the time that we are roughly referring to, 20,500 1 year back. That is when the Bank Nifty value price to, sorry, dividend yield was at a very low point of 0.9%. Fundamentally, we were as expensive as in 2008 or 2010 or 11, right? Really want to kick myself for not doing this more regularly, right? Anyhow, because had we known this, we would have known that the banks were bloody hell expensive, and there's not much more headroom left. For all we were very close to the 2007 levels in sorry, 2008 peak levels, not post crisis. I'm talking about the beginning of the crisis, not very far from there, 0.9 to 0.7. What was I thinking? Anyhow, what was I doing rather? Okay, so things are becoming cheaper on the Bank Nifty dividend yield, but they are not really compellingly cheap, and they won't even if they fall even 10% lower and all. Having said that, if I were to look for a sort of band in which Bank Nifty has stayed dividend yield since 2006 for the last say 16 years, is around 1.5 on the high side, 1.6, 1.7. So we're getting there. The value right now is 1.36, say 1.4. If you go to 13,000 on the Bank Nifty, we are where right now? We are at 14,300. But if you go to 13,000 thereabouts, you're talking about a 10%, yeah, approximately bingo, almost 10% fall, and that would make the oops, the yeah, the Bank Nifty 10% cheaper, but not compellingly cheap. Not the same way as you already saw on the Nifty. However, good enough, right? 1.4, 1.5. It'll hit this level, right? So banks would become cheap. The only question would be the earnings for the bank. There is talk about recapitalization, which would be a big plus. If things like, I think the guy's name is Prabhakar, CEO of Bank of Baroda, and there's a whole bunch of new CEOs appointed about 6 7 months back. Please go refer to the IMR there. We had a detailed discussion at that time about that, and we said about how it might be positive. And there's a lot of news that we discussed in that IMR about how a lot of analysts felt that this could be the start of professional management for the public sector banks. Now there's talking about an appointment committee or something, a bank review board. I'm not sure what it was. If any of you know, just put it in the chat box. Anyhow, valuations wise, dividend yield, things for the bank nifty looking definitely attractive, another 10% lower. So PE, just to review, was at reasonable levels right now, just last week before the bounce. Any 10-15% lower, definitely the banks are good. Then dividend yield was good, and was getting good rather. And finally, we look at the price to book value ratio. And in that, let's again make it easier to read. Okay. Okay. So price to book value ratio, that's where the lows have been for the last, since the so when we crashed last time, in 2009, this was the low, and you can see this is, just simple re-rating that happened in 2000, 2002, 3. So don't really compare that to this. And if we look for a band, I would say somewhere there or even there, yep, is really expensive. That's the same thing in 2015 that you saw here, following my cursor. And it's at 2 right now. The PB ratio of 10% fall. On the bank nifty, we're talking about 1.8, and 1.8 is really there. I mean, it's really the 2000 level, the 2013 low, and that's where the market recovered to very quickly into the, going below 1.8 or 1.5 would really make this very, very attractive. So the one thing is absolutely clear, folks. Looking at the bank nifty and the nifty, 10 any if the market goes 10% lower, around 6.5 6.3, then there is definitely fundamental buying that one should take advantage of the opportunity. And there is also uh, um, remember, last week we spoke about how there is good support for the European indices, 10% lower. This and all that is really nicely syncing up, right? The only thing I can think about right now, given what we've discussed today, is that if the budget is a really good surprise, 6,300 may not happen, right? On the other hand, technically, for me, and if you look at Dow theory, 6,300 happening would be a really good thing, right? And again, at those levels, good value. Okay, so there is, we might as well finish that. I think we have, let me just check. Okay, so the next big component would be CNXIT. So let's look at CNXIT. And if I look at CNXIT in the volume, etc., then CNXIT, well, definitely a better performing index. It's holding, we are on daily charts now, right? It has moved up very nicely, much more than the overall Nifty or the bank Nifty has. Again, the volumes are a concern, but nice up move. And well, no surprise, dealing with this resistance, I would say. Okay, some line we had put more than a month back. Okay, so it has definitely headroom problems. 10,000, 11,000, sorry, 11,100. A lot of moving averages is going to be an issue, but this up move is looking confident. and if there is a correction, then one should probably buy into that. Okay, so can't say the correction is over, but it did come to a multi-month support, and then has just bounced from there. Having said that, if I were to just again take the same view as I did for the Nifty, etc., then we have not yet tested these levels in any significant way, which is around 7,300. Okay, and yeah, but that's really a long way off right now, and I don't think we have to worry about that at this point. 9,200, 9,100 would definitely be levels to watch out for. So the the CNX IT seems to have recovered. Early days to say it is back to a bull market. We'll have to wait and watch. In terms of the valuations for the IT, where did that go? Yeah, so we'll do Nifty ITPE. Okay, so just in case you're wondering what a crazy chart this is, please remember that this is from the dot-com boom era, and really it was a different thing there altogether. Okay, all right, so we will have to sort of just cut out that data and ignore it and look at something more reasonable. That is one thing to remember. Okay, wow, what a so much rescaling. Okay, so we definitely need some more points. So that is one level. All right, okay. So in terms of Nifty IT, well, this is where the 2009 lows were. We are really not looking at that, I think, at this point. And this is where 2012, 2013, and we are at 18.7, 10% fall. We're talking about 17. Yeah, we're talking about 17, which will bring it to a bit higher than this level. Okay, we'll bring it to about there. Okay, which is this is fine, and that's definitely good support that we are talking about at those levels. There we go. All right, so sort of a support zone for sure. So IT also showing some um, has begun to show it that it's come to good valuations. Nifty. All right, we want to look at where is that? Oops, price to book value. Same situation. Not surprised. All right, and then let's zoom in. There we go. So in terms of price to book value, we are right now at 5.69. Okay, and clearly sort of have come into the support zone, and a 10% correction will make it go to 5.1. So just about there. Okay, Right. In case anybody on the recording later or here is wondering, it's not necessary that all of these are going to correlate. Some of us might be thinking you just look at one, they'll all fit. Not necessarily. You saw that in the case of the Nifty, how the price to book value had become so attractive, but not the price to earnings ratio, right? Okay, so the on the IT side, this is also looking quite favorable. Uh, and on the dividend yield, and as expected, dividend yield goes up as the price comes down. It's, remember, inverse. We need to keep repeating that because uh, we tend to forget. And wow, this is pretty good. If you have money, you should be buying IT stocks tomorrow. Seriously, I'm not joking. This has now come to almost the highs of the 2008 crash. Okay, we are at 2.7 on this damn ratio, Nifty IT dividend yield, right? And a 10% correction will take it to just about exactly that. This is the cheapest ever ratio that we have seen of the six that we have done so far. On the actually nine, right? I forgot the bank Nifty. This is screaming. Okay, I shouldn't say that. It is screaming that you should be ready to deploy cash, at least in the IT sector. I'm not saying you've got to do that tomorrow, but any movements down on the IT side should be looked upon as once in a 5-year opportunity to get into that sector. Um, you know, uh, one out of in every index that we have done, the Nifty, the Bank Nifty, and the Nifty IT, at least one out of three of these ratios have said we are already there. Okay, but in the case of this Nifty IT dividend yield, it's like saying we are there and bloody hell you didn't buy. What's wrong with you? Okay, uh, another of these indices or two in the coming weeks or months maximum is going to be in a very favorable buying situation. Two out of three is a very good situation, a very good scenario to be in, right? What I need to do now is really sit on doing some really in-depth technical and, if possible, fundamental reviews of many of the stocks of these sectors and see which could be the better ones. You could look for outperformance from various angles, fundamental or technical, and it is worth putting in that time and effort. Find that outperformance, and you could be sitting on uh, possibly multi-bagger returns in the next 2-3 years, right? Of course, all said and done, it is fingers crossed, prayers up, and inshallah, and all that. All right, so can't rule all that out. So I'm just blabbering right now. Quite frankly, I didn't expect to see this at all. I was little speechless with Nifty, but Nifty IT has just left me zonked. Uh, Start looking closely at the news. You might start to see bulk buying activity, bulk deals on the IT stocks coming our way. For all we know, they've already been happening, and I have at least not been tracking the news. Uh, yeah, we just really need to just get cracking on this. It has become urgent to make these finds happen. Okay, so this is IT, and just to, what more is there to say? Anyone has any questions, please put them in the chat box. I'm going to wrap this up in the next few minutes. So what I want to do is look at some of the other indices. So I'm not going to do any other fundamental indexes today, right? We did the Nifty, Bank Nifty, and the CNXIT, and the IT and the banks constitute more than 50% weightage of the, or almost 50% weightage of the Nifty, and that's it. If these two guys are cheap, and they are starting to turn around, there will be value buying that will happen with fundamental investors, and that's enough to stop the market from going down at least. And then it'll just rub off on the other sectors, and things could really start to look well. And what's really uh, I've got a devil in my head right now. Two different points of view is this is all happening without any major crisis as such, right? So either the market knows something that obviously I don't, uh, which is some major thing lurking in the corner next few weeks or months, which is just going to blow up in our face and the markets are going to crash. Right now, I can't think of what that could be. Okay, and the other thing is uh, the economies are going to recover and they're going to surprise us really, you know, with the stage of the recovery. Commodities could recover. Oil has perhaps recovered, uh, perhaps in big question marks. And there could be something fundamentally good about the economy, which the market has started to price in, but we're not yet seeing it on the news yet, right? So there could be a very big, I don't know, crisis on the one hand, or there could be something else which is fundamentally good, but we have not yet seen it in all the negativity that there is, right? Uh, just trying to think of things. There is this tentative peace deal in the Middle East, Saudi, not Saudi guys, right? So America and Russia sort of coming together. Obama would love that to, come together. It would be his like parting glorious bye bye to the world in a sense. Uh, in his last year of presidency, to see that, he pushed for this. There's been an announcement, of course, of Obama going to Cuba yesterday, and I'm sure he'd like some more feathers in his cap. He's got a few months left at best, and something in the Middle East would definitely be great. Uh, the OPEC thing, if they're coming together, bring some stability. China, there's really not much more news out of that as far as I know. And yeah, I'm just trying to think of various factors I haven't mentioned. Okay, so like I said, just want to reiterate, something fundamentally good is happening inside and we're not seeing it. Start looking at the news, guys. Start looking at it very closely. Start looking at the middle sections, not the top papers, and see for what there is. Start talking around and look. The problem is I can't tell you what you should look for. Okay, just be very sensitive. Let me just put it that way, to positive news which is not there in the media in the way it should be, or negative news which is not there in the media the way it should be, right? According to whatever your judgment is, my judgment is. And I think if we can just keep communication open on these things, and just whatever, it could be simple, it could be trivial, but I do feel that in the next few weeks and months, we've got a once in a half decade opportunity at least, right? Okay. um, so I want to look at the other sectors. Let's look at PSU Bank, okay, which is really, really cracked way more than uh, private sector, right? Unfortunately, we don't have a full index on this. It's only from 2012. Okay. Actually, I could do 1 second. Let me do that. Okay, I need to close some things. All right, so let me put, where's the bank nifty here? There. Okay, so basically what I wanted to do is just compare. So PSU Bank is here, and that's the full story, and we've got it basically from February 2011. So I want to make Bank Nifty also from February 2011. Okay. Okay. All right. So that's approximately where it should be. Right. That's good enough. So in terms of the bank nifty, uh, in 2011 it was around 11,000, went to 21,000, has come to 14,000. Okay. So just remember that 11, 21, 14. And the PSU bank was at 4, didn't go up. Okay. This was in 2011 and is now at 2, right? So this is a huge divergence between the bank nifty, which has both private and the public sector, and the public sector guys, right? So if you just make it simple, the over what, 11, 12, 13, 14, 15, 16, over 5 years the PSU bank stocks have fallen 50%, and over the same 5 years, and they have not gone up ever from that reference point. On the other hand, the bank nifty has almost doubled and then is still up by about 30%, right? So you can see how well the private sector banks are really outperforming, right? I really wish we had fundamental ratios for the PSU bank. Somebody help, somebody get some contacts with Reuters or Bloomberg or whatever, spend some money, uh, make the calls. And I'm just wondering whether the public sector banks are ridiculously cheap right now. Right? There is some reports that a number of them are below book value right now. So that's one reference point you can look at. And that doesn't mean they should be bought, but things are probably fundamentally changing, and things could really surprise on the upside in the years ahead. Right? So we'll just have to wait and watch. So this could really be a brilliant opportunity which has come after a very long time. We are at 2013, 50% of the reference point, and from here we'll just have to see where this can go. Okay, so if we can, fundamental data on bank nifty, public sector banks rather, is definitely requested. Okay, then let's look at realty. And if you look at realty, oh, right, I think we should look at BSE realty there. Look at FMCG. Okay, so the BSE indices tend to go much further. Okay, so the FMCG this week has done a weekly hammer, so that's good. And we definitely need, just following those, sorry, uh, what candlesticks, we need a, definitely a confirmatory candle, but let's also see if what have we got. Interesting. So over a 2-year 3-year period we are definitely in support zone. Okay, so we've come there. It'll be interesting to see what happens next. I'm just going to put that as a peak for now. May not be, but just for a reference point later. Okay, so that's it. Look at the Nifty Junior. So that's actually still quite far from its triple top or double top of around 13,000. We are at 17,000. That will make a 4,000 point drop. So you're talking about 20-25%, right? So this is definitely the mid cap stocks are clearly outperforming the large caps at this point, right? And that's fine. There tends to be some divergence in performance of large cap, small cap, mid cap, and if one can track that, then one can get a sense of money rotation. Okay. All right. So Nifty Junior definitely. This is daily now. If you remember, looking like the Nifty chart. Give it some time, but what is nice is a lot of lower shadows. Uh, Definitely buying at lower levels, and if it crosses 17,500, then things could really start looking up. All right, coming to BSC indices. So I wanted to look at reality, and then all right. So we've got it all the way from 2008. We're talking about multi-year bottoms on reality, which have just been broken one after the other, and well, still way too early to say, but look at this. The reality index on this day, the low was 1000.08. Somebody was definitely tracking this index live. It came to 1,000 within some tolerance and there was buying. Right? That's all I can say. I can't for my life think of a simpler, more sensible reason than this, right? There's some institution and psychological level, it's come back there and it's just bought, right? There's really no reason to buy because technically it was creating new life flows at that time. I'm going to reproduce this there. All right, there, right? So we've created a life flow 20% below the previous life flow, and it just bounces. Okay, coincidence? Maybe. Means nothing. Maybe could mean a lot on the other hand. Typical same picture as the Nifty or the. I think what was the other index we just saw before this? Yikes! My short-term memory. Uh, Nifty Junior, right? Okay. Yeah, so could still go down, and there is that risk given the overall markets, right? Uh, Kundu is asking, am I switching between linear and log scale? No, Kundu. Might look like that because of the numbers changing, but I'm not because I've got a standard format template and it's the same thing. I just change symbols. I don't change formats, right, or layouts. So I'm not doing that. It might look like that because these x-axis numbers for different indices are like that, right? But they are all log scale, right? So the y-axis is all log scale. That's my standard format. I never change that. Okay. Okay. Um, okay. Next, so reality is one place which is I don't know, psychologically bottomed out, but no other sign of that. It's at a life low. Then we have power, right? Again, looking exactly the same as reality, BSC power. Okay, except that it's not made a life low. It just come to, I would say, just a healthier level, for lack of a better word, and we are there. Okay, so let's see. Hmm. Okay, so nothing much to see in power. And then let's look at autos. Autos have made a smart recovery, no doubt about that. And they seem to be going back up. Oh, there's a piece of news which is probably totally irrelevant, but since we talked about auto, I'm just going to talk about it. That there's a proposal to cap the number of uh, registrations of new vehicles in Mumbai, right? This is just a thing that's not really going to happen. Okay, there's going to be huge lobbying for it. You can be sure about that. Okay, but the more important point is, I don't know when they're going to implement this, but apart from that, they want to make some 707 kilometers of road wider, some 34 exclusive lanes for public transport, 29 rail over bridges, 19 flyovers, 6 elevated roads, 100 cycling tracks and all that stuff. Yeah, but to be completed in 2034, all right, and is going to cost 1.55 lakh crore. Okay, I don't know. So anyhow, the thing here is, and by the way, good things, right? Um, Ban on new car and bike registration in the city after a cutoff date, and a cap on new vehicle registrations each year. It'll be like a quota system. They're going to give out so many, and that's it, right? And mandatory housing space in mandatory parking space, sorry, in your house or apartment or whatever, in order to register a vehicle. I really hope that all cities do this. Will car sales come down? Bombay is a big market. Really, it's not going to happen right now, but let's see. I just wanted to just put this out there because I just read this before our IMR. Okay, so I was talking about auto, and auto index has definitely done well. Not, far from its life high, actually, right? So one of those which has really done well, and uh, could have could be sitting at a bottom, but too early to say. Okay, the the green candles, the hammer, this Marubozu, showing, I would say, a lot of strength that you can't ignore. Okay, then consumer durables. Right, so remember the early part of the session where we discussed a set of consumer durable stocks. Those and the index just basically reflecting the same thing, but it's come to its 200-day moving average, and so that will be something to watch. Capital goods. Okay, this is interesting. Come to resistance zone, and it'll be really nice to see, interesting to watch what happens next week. If it can close above 12,000, then 12,800. Of course, the budget is going to be a major thing, right? Okay, if there's some big things on infrastructure and industrial stuff and all, then we've seen the worst of capital goods. Okay, 11,000, and it's way below even the 2008 peak. It never came there, and it is tested multi year lows all the way from 2007. So for literally a decade long, support has been tested. It's gone up, and if it can now break 12,000, then 12,850 is surely something that is on the cards. As long as 11,000 doesn't break on capital goods, the worst could technically be over. FMCG, didn't we do that? Yes, we did. We did CNX FMCG, basically the same thing. And then saving the best for the last, sort of the mid cap. All right. And sorry, metals, right? And here, those of you who've been regular, uh, please note, we didn't really do anything here on this right now, and we said, is there perhaps a false breakdown happening here? And well, you know what, that just might have gotten revalued. This was put a long time back. This was the middle of this event happened in the middle of 2016, but this tag was put, I think, a few months back, right? This study. And with the sort of recovery that we are seeing right now, this is a daily chart. Okay, sorry, what am I saying? Just review this. So what happens if you don't pay attention sometimes? This was mid-Jan, okay, and I put their false breakdown, and then we went up, came back down again, and then we've got this fantastic Marubozu taking it well above this support or resistance zone, okay, and it is probably now, in my opinion, firmly staying up, and even the short-term moving averages have turned around. You've got a double bottom in the short-term moving averages. Please look at it closely, okay, and that's definitely a healthy sign, right? If the metals continue to just trend up 7,000, let them do it slowly. Could be quite happy with that, right? Then we could really see much better levels at 7,200, right? So this is definitely, if you remember Doe theory, We talked about this sort of sideways channel. I'm just going to extend this and keep it for the future. At some point this trend line will break. It's not a question of if, it's a question of when. And if you look back long enough, look at this low here, okay, and look at this low there, okay. Similar levels, I would say, okay, this low here and this one in July, August of 2013. So we've got a massive multi-year double bottom potentially there, which is perhaps not likely to break, okay. So no wonder the metals are showing strength, okay. And on that, so where's my sheet? Yes, on the you talked about, we if you remember, we talked about the bullish divergence in metals, and that has just become stronger on this one at least, right? Very obvious in every indicator that you can see, including a lagging indicator, you're seeing that divergence, okay. So metals are probably definitely a buy. Again, don't have the fundamentals of it. Let's see if we can do something about it in the coming few days and weeks to get fundamentals for all of these, or at least many more of these indices apart from just banks and um, IT, and that will give us a lot more grounds to make decisions on, right? So that's it. Oh, sorry, not that's it. There is one last thing. This is the relative chart of the all the sector indices. Some of you are familiar with this. Okay, let me just take it to, okay, I keep forgetting, where was that? All right, so this high was 4th March of 2014. I want that as a reference point. Wait a minute, what am I saying? 2015. Yeah, no, wait, 2014. 4th March 2015. All right, so we are approximately there. All right, so we are exactly just, all right, that'll do. All right, so in this we're looking at the relative stuff. I just put this intentionally last to see if there was anything. Last week we were saying that really everything was definitely going down, really nothing great, and really the picture has really not changed too much, except that, hold on, all right, I'm just going to really, it's really cluttered now, I know. Okay, I mean, that's, you really can't look at it any other way. But one sector that seems to have really shot up, right, 4.8 is the metal plant, 4.87, right? So this one has really shot up from this reference, this lot of what? This is what? Yeah, 12th Feb, right? 12th Feb. The one which has done the best is the metal space, okay? So metal has dramatically, I would say, outperformed. Then at minus 9.7 is what? Uh, autos, right? So metals and autos have actually probably done the best, right? If you want to really, I don't see, let's see how much we can Squeeze this in. Okay. Okay. Uh, right. So the one which has basically moved up the most. So this one 6.2% is metals. Yes, metals. Then which one is auto is flat. Okay, so basically because the reference points have changed. Okay, so one more method of looking at relative strength over different time periods to get a sense of which are the indices which are or sectors, and you can do that and drill down to individual stocks which are doing well, right? So I'm okay, so that's it. uh, so what we saw in the individual stocks, I just wanted to reaffirm how it was comparatively, sorry, individual sector indices. I wanted to reaffirm by looking at this relative strength. All right, so that's it. Just in case I was missing anything. And with that, honestly, end of this session, I think it's been a really good, fantastic find. All the stuff that we have looked at, fundamental side of it, I think just extremely sweet timing, giving us sufficient, um, uh, what would I say, opportunity to really look back and get all the things that you need to be prepared. Uh, the Nifty IT is brilliant placed, and the Nifty PE and dividend yield PB not yet there, but I would say the price to book value ratio is really looking attractive on the Nifty PB side. And on the bank side, it is also good. And like I said, the public sector banks might be a mouth-watering opportunity. Hopefully, we'll have some data on that the next time we meet. Right? So to wrap it up, be ready on cash. If you've got any money sitting around, start working on sitting on cash, liquidate it. Your opportunity could be exactly 2 weeks away. Not exactly, okay. 7, 8, 9, 10 days, exactly 10 days away. 29th is the budget, and something could happen on that day and we could have a dramatic recovery, or at least it might just set the mood moving forward. Um, will There's still one concern that I have, which is the market at 6,300, just purely for technical reasons. Let's see. So let me put out a, in quotes, ideal scenario. Budget is not so good. Market crashes, goes to around 6,300 between now and say a week after the budget. And then everybody realizes, with all the post-mortem analysis and interviews by the FM, the PM, and all that, and some global helpful events, and it's all forgotten, and things are like, now we are like back onto growth. Uh, so bestest, sorry, I know it's wrong English, case scenario in terms of time is the next 2 to 3 weeks, where just the uh, levels come and the bottom is put in place and we rise. The other one is we just drag on. The budget tends to be a non-event, and it just goes sideways for some time, and then something else triggers the market. The thing that I really don't like, again for purely technical reasons, the budget is nice, everybody loves it. We don't go to 6.3 and we just take off from here. Everybody will be happy, but then I'm left, at least, and this is a purely personal point of view, just feeling a little empty about that 6.3 not being tested. And the worst thing is for that 6.3 to market to just shoot up from here, go all the way to who knows 10, 15, 20,000 on the Nifty, and then remember, oops, we left one door open there, and a window open there. It's not a window, but a level we didn't test, and come back down. So I'd rather just see that happen as early as possible. I know I'm repeating a lot. I'm just looking at these charts as I speak, and I'm like just trying to wonder what could happen. Okay, so thank you guys. It's really been nice. Just a reaffirmation for me that I need to look at fundamental stuff more frequently. And a buying opportunity is surely and very well presented itself to us, and it would be really criminal for us not to take advantage of it this time, right? Not that there's any hurry, but at least in the next 2 quarters, I would say max is when this opportunity will last, right? Great. If you have any questions, I'm happy to take them. Hopefully the recording should be up by tomorrow. Uh, and we will continue on this analysis, subject to getting more data like this in the next few IMRs, to try and get even more specific on what stocks or what sectors, specific sectors, and then hopefully specific stocks could be um, looked upon, right? Great. Any questions? In the meantime, nope, too much overload today, right? Super. Thank you so much. I hope you have a nice sleep, dreams in your eyes. Have a great weekend. Get the cash ready, and all the best. Thank you. Bye. And yeah, please do send in any feedback on this contact information, right? Where is this? Right, so anything, get in touch on email, phone, whatever you need to. Would love to hear from you on any feedback that you have, especially on how we can get more specific and stock pick in the next few weeks. And yes, again, before I forget, I know I keep coming back, 29th, I think we will have a full day live session at BIC, right? It will be charged. If you're in the mentorship program, then it's not, it's part of your package. And if you want to come, do let me know, because we would like to keep it as a nice tight discussion, and we'll see how that goes, right? So if you want to be there on the 29th as the live budget is happening, do let me know ASAP, right? Thank you and good night.